The market's taken a few hits this week. It's tried to push higher with equities, but failed. What do you make of that?
Well, it's probably too high to start with. I mean, I accept that we've got very easy liquidity. Makes it very hard to go into the bond market. I think that we do have the most important sectors of the U.S. stock market have surprised basically on the upside in the earnings season. But there's an awful lot of uncertainty out there, and we shouldn't be knocking on the door of an all-time record high, given the level of economic distress and the level of uncertainty. So I think the market is sort of ripe for a pullback anyway.
But what happens if inflation really does move higher? I mean, I was struck by Robert Kaplan, saying he would be okay with a 2.75% inflation expectations. You miss higher. You look at the 10-year break even higher. What if that's real and sustainable?
Well, it's a dangerous game we're playing here, because over the course of this pandemic, we have ramped up U.S. federal debt tremendously. We will go from about 77% of GDP as a debt to GDP ratio a year ago to about 108% of GDP by this time next year. And that's an enormous amount of debt. And the problem is you can finance that if interest rates are very low, but if inflation begins to go up and long-term interest rates begin to go up, then that's going to put real pressure on the federal budget. So I think that there's a real issue there, and I do think we should take inflation seriously. Now, what it means is once the economy begins to recover, we're going to have the discipline to deal with the deficit.
How do you position for inflation, David? What do I buy? A lot of people say that you buy gold when you're worried about inflation. I struggle with that. I wonder whether there are other assets that are better if you believe in an inflationary environment that is coming towards you.
I think there probably are. I mean, gold is, has changed its stripes over the years. It used to be great inflation protection, but then it rallied a lot in a very deflationary environment. So I'm not sure how much inflation protection it gives you. But I think residential real estate, make sure you own your own house. If you want to invest in that a little bit more, or buy some real estate, I think that's residential real estate. I think that's fine. I think also commodities will help, because if you have some inflation in the U.S., you'll probably have a falling dollar. A falling dollar will push up commodity prices. So that's another way to go. Infrastructure, there are various real assets you can get into. And the one other thing I'd say is value stocks more than growth stocks, because value stocks are about the here and now. Growth stocks are about earnings in the hereafter. And when you've got rising interest rates, that should ding growth stocks more than value stocks. So I'd rather be a little overweight value as I went into an inflationary environment.